Tuesday, April 9th, 2019, Maneco 64, home of alternative economics and contrarian views. This morning I want to talk about how all fiat currencies are sinking and that trying to hedge dollar exposure through going long or other fiat currencies, in my opinion, in the long term is not a great strategy. And of course, what's the best way to hedge against all fiat currencies sinking, including the US dollar? Well, it's holding physical gold and silver. So today I'll go through the dollar index and what it has done since its inception. And you will see what I mean, that it's not a great strategy to hedge for dollar weakness by going long other fiat currencies, or vice versa if you live in another country where other fiat currencies are used to go long dollar because your currency is getting weaker. Before I go into that, of course, I'll look at what the markets are doing this morning. It's just before 7:30 a.m. London. Yesterday, the stock markets were fairly weak across the board. The Dow especially lost a bit of ground, was down 84 points, 1/3%, but the rest of the S&P and NASDAQ were actually up on the day. They crept up, but marginally, I would say. So where are we this morning? Well, spot gold and silver did fairly well yesterday. Gold got back above 1,300. I think the high was around 1,303 in the spot price. Right now we're at 1,298, up about just $1. So gold still not getting much direction. I saw that platinum yesterday did well, but and it's broken out from key resistances. But if you look back over a year, platinum dropped a lot more than gold. So that's, don't follow platinum too much, but just to silver right now, it's at 15.22, down about 2 cents. Range has been 15.29 to 15.21. So precious metals still not going anywhere right now. Frustrating, but that doesn't really matter, I think, in the long term. So precious metals still being kept from moving too far up or too far down. So in the range trade at the moment. We've got the stock market this morning. Right now we've got the Dow future down about 60 or 1/4% at 26,270. S&P is down 4 points or 0.14%. A NASDAQ 100 is also down 0.14% or down 10 points. The currencies, the pound is up about 12 pips or 0.1% at 130.73. A euro is 112.63. And the Japanese yen, the dollar is down 0.1%, 111.33. So market's fairly steady at the moment. Oil is continuing to move up. Right now it's pretty steady, unchanged on the day. WTI 64.30, Brent 70.77. The bond markets, yields went up a little bit yesterday. We were around 252 in the 10-year, so it's unchanged right now. The 3-month is 244, the 7-year is 242. So the curve is inverted there, 3 to 7s, but it seems like yields are backing up a bit. That means bond prices are going down slightly, but need to keep an eye on it. So dollar index, I've made a few videos about this. I even wrote, I used to write back over, about 12 years ago, I started a blog called forsoundmoney.com, and I used to write things on that blog. And one of the articles I wrote was "They Are All Sinking," and it was about fiat currencies and how you had to have gold because trying to hedge with other fiat currencies for your currency dropping or going up was like a useless exercise, and I still think it is, because the dollar might be going up against the pound, for a period of time, but then the dollar will drop and the pound will go up. So they're all like sinking, but they come back up for air a little bit, and sometimes they sink at different rates, but they're sinking to the bottom against real things. You go back to 1968, the pound, 1 pound, I think the price of golden pound was about 17 pounds. Now it's almost 1,000. In dollars, it was, 1 ounce was 35, and now it's 1,300. So it's clear, longer term, you need to have precious metals to protect your savings, your wealth. If you can accumulate some, if you're able to save, because this fiat money system is designed to impoverish the general public. And that's why when I saw Ray Dalio, he was in 60 Minutes, he's got the problem, right? He's got the symptoms, of the fiat money and the inflation. There's a lot of inequality. The American dream is dead. The American dream for other countries, the British dream, because other people think like Americans as well. It's not just Americans that want their family to do well and people want to succeed. So this is the other fallacy. It's not just an American dream. It's a human dream, I would say. But he never mentioned the monetary system. And why does it impoverish the general public? Well, because it's done in a stealth, insidious way, the inflation. It devalues the value of the existing currency because they always create more and more currency. So you start out with $100, then the central bank goes and creates 1,000, and all the people that have $100, those dollars are not going to buy as much because they're going to have competition from the extra $900 that were created out of nothing. And he never mentioned that, Ray Dalio. He mentioned that we have to look at the tax system and tax the rich. Yeah, the rich are able to protect themselves from an inflation. So it's the system that is screwed up. It's not that you need to tax the rich more. It's not going to solve anything by taxing the rich. They've benefited from it. Ray Dalio is worth $16 billion according to Wikipedia in the beginning of this year, but he never mentioned, the monetary system. And I know he's worth that much, and he's a clever guy. But I'd like him to maybe, if he sees this, look at the money, Ray Dalio. Look at the monetary system. That's the problem. Anyway, so the dollar index. What is the dollar index? We need to know what it is first. It says here on Wikipedia, dollar index, or DXY, or USDXY, or DX, is an index of the value of the United States dollar relative to a basket of foreign currencies, often referred to as a basket of U.S. trade partners' currencies. The index goes up when U.S. dollar gains strength when compared to other currencies. The index is maintained and published by the Intercontinental Exchange, Inc. The name U.S. dollar index is a registered trademark. So what about the history? USDX started in March 1973, soon after the dismantling of the Bretton Woods system. At its starts, the value of the dollar index was 100. So there you go. Right now we're at 97. So since then, the dollar has gone down 3%, I guess, against this basket. The basket has changed, mainly because of the euro. The euro used to be several other European currencies, the Deutschmark, the French franc, the Dutch guilder, the Italian lira, but now it's the euro. So it's pretty much the same, but it's just that the euro is taken over from a few other currencies. There's the Japanese yen, pound sterling, Canadian dollar, Swedish krona, and Swiss franc. So looking back, 1973, gold had already started floating. It was above 35, but it was somewhere around, I'm not sure, it was between 35 and 100. So the dollar's gone down 3% since then, but gold is at 1,300. I wanted to note the most recent long-term bottom in the dollar index was in March of 2008, and that was a top in gold as well at 1,031. And the dollar index got down to around 70.69. Yes, it's gone up now. It's at 97. But what has gold done in the interim? Well, it's gone from 1,031 and we're now at 1,300. So it just goes to show you that yes, in the short term, it's important to look at the dollar index, but gold is still the ultimate hedge for every fiat currency. Yes, you can go on and trade foreign exchange and make some gains in your currency or in the dollar or whatever. But in the long term, you're playing a game that's not going to benefit you. Of course, there are a lot of people who trade foreign exchange who make a living from it. But as a long-term strategy for maintaining your wealth, you need to stick to precious metals, because we know what precious metals have done over the long term. The dollar index, for me, is a distraction. Even though I think the dollar index made a top, we get these 7 to 9 year cycles in the dollar index. So we had the low into March 2008. We had a top in January 2017. So that was roughly 9 years. And I think now we're in a downward leg for the dollar index. Well, it's going to be for another 7 to 9 years. So let's say somewhere in 2024, 2025, the dollar index will probably bottom again. What gold will do is anyone's guess in terms of price. In 2008, of course, we topped at 1,030. We dropped in the height of the crisis around 780, or sorry, around 680. So it dropped there. But don't forget, when the crisis started in 07, gold was at 600. So it held quite well. But then quickly, if you try to buy gold when gold bottomed there in the height of the crisis at 680, you could have, but you would have paid a lot more than 680, because I remember the premium for physical was huge. And then it went straight up to, well, not straight up, but it went to 1900 a couple of years later. Yes, it's come down and it's now at 1300, but you know, it's up just like the dollar index. So there you go. The dollar index is up in the last 11 years, but so is gold. So don't forget, all fiat currencies are sinking, and you need to protect yourself with real money, physical gold and physical silver. As Lynette Zhang says, you know, it's better to have a metal shield than a paper shield. So if you enjoyed this video, make sure you hit the like button, subscribe to the channel if you haven't yet, or think about subscribing. Share the video far and wide with people you think might enjoy this content. Make sure you hit the little notification bell above to be notified of all my new videos. And you can also follow me on Twitter, Steemit, and on DTube. I wish you all a great day. Take care. Bye.